one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. A 26-year-old man has been named as a person of interest in the fatal shooting of United Health Group executive Brian Thompson. He was arrested today in Altoona, Pennsylvania. The man has been identified as Luigi Mangione, and he was recognized, according to police, while eating at a McDonald's restaurant by an employee. He was found with a manifesto, multiple fake IDs, and a so-called ghost gun with a suppressor similar to the one used in the shooting, this according to police. The other major story today in New York City, an acquittal for Daniel Penny. He is the Marine veteran who used a chokehold on an agitated subway rider in a death that became a prison for very differing views about public safety, valor, and vigilantism. Stocks lower across the board. The Dow, the S&P, NASDAQ, all in the red after last week's records. Stocks retreating after a furious rally, with the S&P down 31 now, down 0.5%. The S&P stands at 6,059. The Dow down 99, drop there of 0.2%. NASDAQ down 119, a decline for NASDAQ right now of 0.6%. 10-year 4.19%, with the 2-year 4.12%. Spot gold up $27 the ounce, now at $26.60 for gold. That's an advance of 1%. And crude, West Texas Intermediate up 1.6%, $68.32 a barrel. A retreat for Bitcoin right now down 3%. Bitcoin at 97,119. Recapping, S&P down 0.5%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Do appreciate it. Let's talk about credit cards. The average American family has a credit card balance of around $6,100. That was back in 2022, the most recent data from the Federal Reserve Survey of Consumer Finances. The average credit card interest rate, more than 20%. That's according to Bankrate. But how much they pay in interest on debt could go down if President-elect Donald Trump makes good on a campaign promise to cap credit card interest rates at around 10%. For an idea of how that would work and how consumers feel about it, we bring in Matt Schultz. He's a chief credit analyst over at LendingTree. He joins us here in the Bloomberg Business Week studio. I was surprised to see the results of this survey that you put out, because what credit card consumer wouldn't want rates to be capped?
Yeah, it is kind of amazing that this number isn't closer to 100%. Like, maybe if you work for one of the card issuers, you're not in support of it, but I'm not sure why anybody else.
Maybe that's 20% of the population.
Do they not? Was it a question of the survey? Like, do they not understand what this? I mean, they would save money.
No, we've done this survey multiple times, and the numbers have been similar, and we've actually seen broad support for a rate cap kind of in a vacuum. Actually, we've seen that support fall a little bit over the last few years, and honestly, I'm not 100% sure why. I understand that some of it could be kind of just a philosophical thing, where less regulation, that sort of thing, and that's an argument that you could certainly make. But what's interesting is that the folks who would make that on the Republican side are actually more likely in the survey that we did to say they support a cap. So it's interesting.
Let's talk about some of the other categories. You know, think about in a vacuum support. But also, I thought this was interesting that of those who support a cap, 66 say that they do so even if it means reduced rewards. And rewards are fun. People like getting rewards. So that stuck out to me.
It's a big deal, and that number has actually grown a lot since we first did it 5 years ago. When we first did this in 2019, that number was 52%, so just a little over half. So to go up to now 2/3, it's a big, big jump, 14 points in 5 years. And I think what that does is it tells you how frustrated people are with high interest rates. Because if, like you said, we all love rewards, and if you're willing to sacrifice rewards to get a lower interest rate, that tells you a little something.
But our rewards, they seem to not be as good as they used to be. Like, we know with the airline credit cards, the rewards points are losing a lot of value. The frequent flyer programs aren't as good. Do Americans have an idea that rewards are actually better? It seems like they're really not that great out there right now.
Well, they really haven't changed all that much in the last few years, really. If you're just looking for cash back, things are actually a little better because there are more cards that are just giving you a flat 2% back on everything you buy, when that used to be kind of an anomaly. But with more of the kind of travel rewards, if anything, it's getting a little harder to get those cards just as banks kind of tighten up lending. So you may need to have a little better credit to get that type of card, or at least the higher end card. But the other thing would be that we have seen a trend toward higher end credit cards, higher annual fees in like the 400, 500, 600 range. And that's talking to a really specific type of person and not the average person who's trying to make ends meet.
Sometimes I'm at the airport, Katie, and I see all these people waiting in line to get into a lounge.
Yeah.
And they're like the people who spent $800 on a credit card, and they still can't get into the lounge.
Yeah, that is pretty frustrating. Good context there. But outside of survey support, which is still at a very high level, I mean, what is the political appetite for something like this? I mean, is this even a conversation that's being had?
Well, it is a conversation that's being had. It's still a long shot. But if you have bipartisan support, and most importantly from the president-elect, who talked about this on the campaign trail, there's at least going to be conversation, because what we've seen, the reason why we did this survey first 5 years ago was that Bernie Sanders and AOC first were the ones who kind of came up with the idea of a rate cap, along with Elizabeth Warren too.
Now enter President-elect Trump, talk about strange bedfellows.
Yeah, and Josh Hawley did one a couple of years ago, I think in the midterms, if I remember correctly. So, but even though you have big, high-profile players, there's a lot of powerful interest and a lot of money saying, no, this is not going to happen.
So let's talk about that side of this. What happens to the credit card issuers, the banks, if something like this does go into effect? Who ends up losing?
Well, what the card issuers have always screamed at the top of their lungs is that if there's a rate cap, rewards would basically vanish, and it would be a lot harder to get credit if you have imperfect credit.
Do you believe that?
At least to a degree, yeah. And certainly with a 10% rate cap like President Trump mentioned, that would have massive effects. And we've even seen the only rate cap that there really is in the country now is with federal credit unions. They're not allowed to go above 18% with their credit cards. And what you see there is that there are still rewards, but you're not going to find a credit card from a federal credit union that can match what Chase and Wells Fargo and B of A and those sort of folks do. So there's no question that there would be an impact.
Yeah, it's really an interesting topic. But Matt, while we have you, I do want to talk about rates in general, specifically interest rates. We have a Federal Reserve meeting, one more to go this year, and obviously the Fed is in cutting mode. What does that mean when you think about the impact on personal finances that rates are finally starting to come down here?
Well, it's certainly good news, but it's going to take time because if, like, talking about credit cards, if you cut by 1/4 percentage point, it's it's maybe $1 or $2 a month on the average debt that somebody has. So it's really not that much of an effect. Added up over time, if they put their foot on the gas, great. But the truth is that now the best thing that you can do is kind of take action and take matters into your own hands. 0% balance transfer card can be good, debt consolidation loan. And we've even done surveys on LendingTree talking about how you can call your credit card issuer and ask them for a lower rate.
Does that work?
The surveys that we've done say that 3 out of every 4 people who asked in the past year got one, and the average reduction was about 6 points, which is way more than the Fed's ever going to do. And we've done those surveys for years, and the numbers have all been pretty similar.
All right, Matt Schultz, gonna have to leave it there. Chief Credit Analyst over at LendingTree. Coming up next on Bloomberg Business Week, an earnings update. Red Brown, Bloomberg News earnings reporter, is going to be joining us. We're seeing the S&P 500 down 0.6%, the NASDAQ down 0.7%.
Listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week. I'm Tim Stenevec. That is Katie Greifeld in for Carol Masser this afternoon. Well, the quarter may be ending in just a few weeks, but we're still in the midst of earnings season.
It never ends.
It never ends.
Yeah, it's just a perma season.
That's why we have an earnings reporter.
That's true. It's a whole beat at Bloomberg.
Red Brown is Bloomberg News earnings reporter. He joins us here in the Bloomberg Business Week studio. So we got Oracle, Toll Brothers, Vail Resorts, and more coming today. We got Adobe, Broadcom, Costco. Those are just a few of the other names that are coming this week.
Yeah.
Who do you have your eye on?
Well, I think you got to have your eye on all of those AI names that you just mentioned there. We're going to get a nice kind of broad view of kind of different parts of the AI supply chain, if you will. We'll get to see what the chips companies are doing. With Broadcom, we'll see how the servers and Oracle are performing. And then we'll also get to see a software company in Adobe and see how they're performing as well when it comes to AI tools and how they're attracting new customers and things like that. So a really nice broad swath from this group, even though it is the end of the season.
So AI, obviously, in the center of the Venn diagram here for most of these companies. I want to talk a little bit about Oracle, though, because, I was clicking onto the Bloomberg terminal this morning. The sun wasn't up yet. There was a story about how Oracle is having its best year since 1999. The stock is up around 80% year to date. And this was surprising to me that this has been such a good year for Oracle, because it took a while, it felt like, for them to be taken seriously in the cloud space when it comes to AI.
No, I think that's fair. But one thing that we saw develop, I think, through the last maybe 2 earnings seasons is that it is these more like AI infrastructure companies that have been benefiting from, from investors taking it very seriously and rewarding them for this position in the market. And they're also being able to post pretty strong results to kind of back that up. For example, if we look at Oracle, expectations are that their constant currency sales are expected to go to 8% this quarter. That's double what they did last year, the same time last year. So we are seeing that kind of acceleration of the business, and they're still able to put up results to back up some of that we can call it hype, if you will.
Okay, we'll get Oracle after the bell today. We'll also get Toll Brothers. The company's on track to post a 21% jump in closing volumes. Going to get a read on a certain part of the housing market. Mortgage rates still high. In fact, a lot of people thought they'd be lower now than they were a couple years ago, and they're not.
No, they're not. But obviously, like you just kind of pulled out the really interesting number there with 21% jump in closing volumes. So they are still increasing the supply. There still is the demand is extremely high for housing, no matter what. So yeah, we will get a view. The housing companies are always good about kind of giving a view on kind of what the demand level is like, how interest rates are impacting that. So yeah, definitely gonna get a nice insight from the management team of Toll Brothers on that.
Yeah, it'll be interesting too. You talk about in your preview about there's some questions around politics here as well when it comes to President-elect's Donald Trump's potential crackdown on immigration, what that means for the workforce. Maybe we'll get some color there.
Yeah, well, with Toll Brothers, one of the things that we're also monitoring is their margins on their houses already. So costs are getting higher for Toll Brothers, for all the housing companies, and the big part of their workforce is foreign-born. So if there is a pretty strict crackdown on immigration, how is that going to affect Toll Brothers and also all the home builders? The housing supply has been a major issue for the country for a long time now. And I don't know if that's necessarily going to benefit, if that's going to alleviate the problem if the workers that are building these houses are no longer available to do so.
Okay, let's fast forward to Wednesday. Adobe, net new recurring revenue. That is the number. That is the metric that investors are very focused on. What are you focused on?
I think I'll look at what investors look at. So I think they've got the right number there in mind. The reason being is that is where we would see any sort of acceleration in AI demand showing up. That number is basically a proxy for how many new subscriptions was Adobe able to sign up. And it's expected to kind of fall for the first time, the second time in 2 years. So this is not really something that happens often for Adobe. They usually are able to collect, and they're kind of the best in the industry with their products. And to us, that kind of speaks to the fact that they're still having some trouble attracting these new creatives that are wanting to use their AI tools. It's called Firefly. So yeah, still seeing some trouble there. And again, to speak into our point earlier about where is the strength in the AI market, it's still in infrastructure. It's less so in some of the software. We've seen the standouts like Palantir this quarter, blowing everybody out of the water, but everybody else is still trying to figure out the actual use cases for some of these tools, and we're going to get some more insight into Adobe there.
Yeah, Adobe's a really interesting one because, like you mentioned, the existing products, best in class in many cases, but then you take a look at the stock performance. It's down 8% on a total return basis year to date. It's not just left behind in this AI phenomenon, if you want to call it that. It's just completely been, ignored, it feels like.
Yeah, and with Adobe, one of the big worries is that they could potentially lose out to some startups. That hasn't yet proved out. But because Adobe isn't extending their technology into this area where you have to have it if you're creative when it comes to AI technology, they're still kind of vulnerable to some of that too. So I think that might also be kind of playing into why we see that drop off in the stock.
All right, Red Brown, a Bloomberg News earnings reporter, joining us here in the Bloomberg Business Week studio once again. Oracle, Broadcom, Adobe, Toll Brothers, Costco, AutoZone, just to name a few of the companies that are still reporting this week. That is going to do it for Bloomberg Business Week on Bloomberg TV. Coming up next on Bloomberg TV, it is the close. If you're sticking with us on Bloomberg Radio, we got a great program coming up. Starting at the top, what's next for Syria and the world after the fall of Bashar al-Assad? And how about $200 a month for ChatGPT? All that and more next.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Peter King. Investigators in New York say Altoona, Pennsylvania police acted on a tip when they arrested a man with several items consistent with those believed to have been used by the killer of United Healthcare CEO Brian Thompson last week. New York City Chief of Detectives Joseph Kenny.
He was in possession of a ghost gun that had the capability of firing a 9mm round and a suppressor.
Police Commissioner Jessica Tisch.
Also recovered was a fraudulent New Jersey ID, matching the ID our suspect used to check into his New York City hostel before the shooting incident. Additionally, officers recovered a handwritten document that speaks to both his motivation and mindset.
Tisch says 26-year-old Luigi Mangione is in custody as a person of interest. The tip came from a McDonald's employee in Altoona who recognized him from pictures released by police. Also in New York, a Marine veteran has been found not guilty of criminally negligent homicide in the choking death of a fellow subway rider. Witnesses say Jordan Neely was agitated and Daniel Penny kept him from hurting other riders. CBS New York's Alice Gaynor.
Members of Jordan Neely's family very upset, also yelling out. Jordan Neely's father was asked to leave the courtroom. There was some swearing going on. One activist who has been outside demonstrating every morning was inside and yelled something at Penny like it's a small world, buddy. We saw Daniel Penny slightly turn his head where I saw a slight smile. Normally he stares straight forward and we can't see much of a reaction from him at all.
With Syria's Assad regime now history, the question is who's in charge there? CBS News national security contributor Sam Vinograd.
It is relatively unclear right now at this moment who is actually ruling Syria. Hayat Tahrir al-Sham organized the march to Damascus, but it is overseeing a relatively loose coalition of groups with Turkish support that have to decide ultimately what form of governance they plan to implement.
His real name is Sean Carter. You know him better as rapper Jay-Z. And now he's accused of sexually assaulting an underage girl with Sean Diddy Combs at a party 24 years ago. CBS's Jerika Duncan with more on the claims from the accuser known as Jane Doe.
She says she was given a drink that left her feeling, quote, woozy and lightheaded. Doe claims she entered an empty bedroom so she could lie down. The accuser then claims she was pinned down and raped first by Carter and then by Combs.
Jay-Z calls the accusations idiotic. He says they're just an attempt to blackmail him. On Wall Street, the Dow is down 145 points. This is CBS News.
people love.
CBS's Steve Kathan is here with a look at this year's Kennedy Center honorees.
Queen Latifah paid tribute to Grammy-winning singer-songwriter Bonnie Raitt. Also honored, director Francis Ford Coppola.
Robert De Niro, ladies and gentlemen.
Don't ever take sides against anyone. An all-star band hailed jazz trumpeter Arturo Sandoval. Also honored, the Grateful Dead and the Harlem Theater The Apollo. The show will air on CBS December 22nd. Steve Kathan, CBS News.
Neil Young once wrote, my, hey, hey, in rock and roll, it's better to burn out than to fade away. Iron Maiden drummer Nico McBrain apparently feels the same way, and after 42 years, he says his touring days are done. Last gig, last night in Sao Paulo, Brazil. I'm Peter King, CBS News.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
It is a Bloomberg Business Week live from the Bloomberg Interactive Brokers studio in New York, streaming on YouTube and Bloomberg Originals. I'm Tim Stenevec, along with my co-host for the next 2 hours and the last hour as well.
Indeed.
Katie Greifeld of Bloomberg TV and Bloomberg News. How are you?
I'm good. You know, I've been in this building for a long, long time, but
well, we still got a few more hours to go.
I'm happy to be here, but we're not on TV.
It's raining outside. Where else would you rather be?
Well, I have some plans.
Okay.
But hopefully the rain stops.
Hey, did you see what's going on with NVIDIA today?
Yeah, it's down. It's down, you know, a couple percentage points.
Which is meaningful on an index level.
I was going to say, you look at the biggest points contributor to the NASDAQ 100 decline right now, it is NVIDIA. I would imagine it's the same story if you take a look at the S&P 500, outweighing what has been, you know, some pretty bullish momentum in the stock market. But NVIDIA, of course, the news there today is that China has opened a probe into NVIDIA over suspicions that the U.S. chipmaker broke anti-monopoly laws around a 2020 deal. NVIDIA obviously is like the intersection of a lot of these trade tensions between the U.S. and China, and that's obviously playing out today.
Okay, well, speaking of NVIDIA and AI, how about $200 a month for ChatGPT? Would you pay it?
Probably not, but right. I'm sure a lot of people would. But speaking of ChatGPT, all of that AI demands a lot of power. Today's big take is about the front lines of a battle over infrastructure that's critical to our tech future, Tim.
We'll also get an update a little later on in the program on the person of interest in the fatal shooting of United Health Group, Brian Thompson, who was arrested out in Altoona, Pennsylvania, a little earlier today. All that and more coming up over the next 2 hours right here on Bloomberg Business Week. First up, though, a check of the day's trade and top business stories. Here's Charlie Pellet.
Hi, thank you very much. And indeed, we do begin with our top story. A 26-year-old man named as a person of interest in the fatal shooting of United Health Group executive Brian Thompson. He was arrested today in Altoona, Pennsylvania, and identified as Luigi Mangione. He was recognized while eating in a McDonald's restaurant by an employee. He was found with a manifesto, according to police, along with multiple fake IDs and a so-called ghost gun with a suppressor similar to the one used in the shooting, according to police. And in New York City, an acquittal for Daniel Penny. Now, he is the Marine veteran who used a chokehold on an agitated subway rider, Jordan Neely, in a death that became a prism for differing views about public safety, valor, and vigilantism. Stocks lower after last week's furious rally that put the market on pace for its best year since 2019. The Dow, the S&P, and NASDAQ all in the red right now. A 36-point drop in the S&P, down 0.6%. We've got the Dow down 158, down 0.4. NASDAQ down 130, a decline of 0.7%. The 10-year yield 4.19%. The 2-year 4.12%. Gold up $25 the ounce to $26.59. Gold right now trading higher by 1%. Crude West Texas Intermediate up 1.5%. WTI right now at $68.24 a barrel. Wall Street coming off of 3 weeks of gains with the S&P 500 index retreating from a record. As for the market backdrop, Nimrit Kang is co-chief investment officer at North Star Asset Management.
The market is telling us that everything's going to go right with, the tax cuts. Everybody's going to have more tax cuts. The corporate tax cuts are going to go down. Earnings are going to go up. We're going to have deregulation, M&A, just like the deal we saw today. So it's animal spirits.
Wolfgang was interviewed this morning on Bloomberg Open Interest. Again, recapping stocks lower, S&P 500 index down 36, a drop now of 0.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. As Bashar al-Assad fled to Moscow, the looters started raiding the presidential palace, and people took to the streets of Damascus to celebrate his demise. The Syrian president had tried to hang on until the bitter end, still desperately sending an SOS to anyone who would listen, including Donald Trump. The authoritarian, though, had run out of road. Nick Wadhams is Bloomberg News National Security Team Leader. He joins us from our Washington, D.C. bureau. National security and international security, Nick. What's the conversation happening right now in Washington, D.C. around a development that I think was pretty shocking to many people?
Yeah, it was quite a weekend, and I think it would have been pretty shocking to the U.S. As much as anybody else, though a senior administration official did brief reporters over the weekend and say essentially that the regime was very brittle. But, I mean, listen, when you look at it, no one expected Assad to fall so quickly. The pace of the advance by the rebel groups. Now the question, of course, is, well, what next? So the United States obviously celebrating the departure of Bashar al-Assad, but wondering what the future has in store with this rebel group led by a group known by its acronym HTS, which is a designated terrorist group in the United States. So lots of questions about wanting to leave this to the Syrian people and make sure they have a better future than they did in the past, but also concerns about the heavy Islamist element of the rebel group and whether that could mean a return of the Islamic State there.
And let's talk about the response. I want to get to the U.S. response, but before we get there, let's talk about what we're hearing and seeing from Russia and Iran. What has that looked like in the past few hours and days since this actually happened, the toppling?
Well, obviously, you saw, as you mentioned, that Assad is now, he sought asylum in Russia, so a clear indication of the alliance between the two countries there. But really, you know, the most notable events in the last few days are what didn't happen. So Russia not willing to defend the Assad regime to the extent that obviously it wanted, and neither was Iran. Russia obviously distracted and its military being sapped by the war in Ukraine, and then Iran's proxies in the region, Hezbollah, for example, decimated in large part by Israel as a result of the conflict there, and Iran really pulling back and not wanting to get involved. So I think what you really saw here was, one, a surprisingly strong rebel force, but also a refusal by Assad's primary backers to get involved, and that left him in the extremely weakened position that resulted in his ouster.
Nick, this happens at a time when the U.S. is going through its own transition to a new leader. By no means, I think that the similarities certainly stop there, but it's worth asking about what happens in a new administration, given what we know about the Trump team's approach to foreign policy in the first term, and what he's talked about on the campaign trail. What do we know about how Trump will deal with this situation?
Well, you know, it's actually a very good question, and in some ways, you know, it's really not very clear that the Trump administration policy would be all that much different from the Biden administration policy. You had a tweet from the president-elect saying, "Don't get involved, this is not our fight," and that was something that he said in the first term, but, you know, the fact remains that under Trump, the U.S. launched airstrikes at least twice against Syria to punish it over its use of chemical weapons against its own population, heavy use of sanctions. At one point, Trump did try to cut the number of U.S. troops there, and while they did reduce the overall number, there remained a U.S. troop presence there. And the Biden administration has made clear they're going to keep U.S. troops in Syria, in part because they want to be able to continue to press against the Islamic State and make sure that that group doesn't have a resurgence. And that is a goal that that President-elect Trump will also share. He talked a lot about his administration and defeating the Islamic State. So, you know, there is in some ways more alignment between these two administrations than you might think when it comes to Syria.
Hey, Nick Wadhams, going to have to leave it there. Bloomberg News National Security Team Leader joining us from our Washington, D.C. bureau. Let's now talk a little about AI, because Would you pay $200 a month for ChatGPT? You already said no.
Yeah, I already said no. There's
Have you changed your mind since I asked you?
Very little that I would spend $200 a month on, but I'm sure I'm not representative of the broader public.
Yeah, maybe it's because you're not a pro, okay?
Yeah,
I'm just going to throw that out there.
That's true.
Let's see what Austin Carr has to say about this. He's a Bloomberg News technology reporter. He joins us from our Boston bureau. I didn't mean to be offensive to Katie that she's not a pro.
No, it's
but
fine.
This is not meant for people like us, Austin. Who's this meant for?
Us mere mortals.
Well, when OpenAI announced this last week as part of their big Christmas product rollout, 12 days of announcing new announcements, they introduced this new ChatGPT Pro subscription at $200 a month. That's $2,400 per year. And you're totally right. Actually, I would say this is a testament to Katie's that she doesn't have to rely on this type of AI
Thank you.
At her job day to day. But these are for power users who use it very sophisticatedly for math, science, sort of really complex coding. So I can understand if there's a sticker shock out there, but this is not for just interacting and sort of getting maybe AI-generated Christmas gifts. This is sort of to really push the bounds of the AI and get access to their latest and greatest reasoning models, which are really expensive to run at data centers, and that's partly why OpenAI is charging more for these products. And it's also partly why they can charge more of those products, because there's not a lot of rivalries out there for people who are paying for these products like they are with ChatGPT, at least in the enterprise and on the consumer basis.
Well, let's talk about that a little bit more. The concept of paying. As you write in the Tech Daily column here, that AI players, they're trying to figure out how much customers are actually willing to pay for a lot of these AI services. So $200, I mean, it feels like a good testing ground.
I think so. I mean, they started with their ChatGPT Plus iteration. That was their sort of, getting customers to go from a free tier to a more premium version for $20 a month. And that got widespread adoption. I would guess that's one of the most popular AI subscriptions out there. You're seeing others like Microsoft, Google trying to upsell with their own productivity tools by adding, AI flourishes to cloud products and sort of document programs. Microsoft added to their 365 productivity suite a $30 per head sort of subscription on top of what they charge for Office and Excel at the office. But there's a lot of doubt about how many people are going to be getting uses out of these sort of products at the office. And so I think that's been this sort of holding patterns. They want to use these summaries tools, these document sort of scanning and sort of using to help write emails. But this is another sort of version of that. This is saying, hey, if you work at a research group or for, a very intense coding, groups, that they really need to lead on these sophisticated AI models to do things that takes ChatGPT maybe a minute or longer to think about. In fact, in the announcement, they said this version of ChatGPT, it takes them about 10 seconds to respond to the word hi, just because it was thinking about it when it's first rolled out. They've since made that a little bit faster, but that's the type of thinking that's happening. It's not just sort of spitting out sort of predicted text as you'd normally get with some of these AI products.
I can think faster than that, Tim. I'm still better than the robot.
And you take less energy, too.
That's true.
Yeah. We're going to talk about that in a little bit with Josh Saul.
Good pivot.
It's today's big take. Hey, Austin, thanks for joining us. Austin Carr, Bloomberg News technology reporter, joining us from our Boston bureau. As I mentioned, coming up next, we are chatting with Josh Saul. It's today's big take and one of the most read stories on the Bloomberg terminal. It's about the front lines of a battle over infrastructure that's critical to our tech feature. In the meantime, tech lower today. The NASDAQ down 0.7%. The S&P 500 down 0.6%. You're listening to and watching Bloomberg Business Week.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. It's been a day of fast-moving developments in the hunt for the killer of the United Healthcare Group executive in New York City last week. Police have arrested what's being described as, quote, a strong person of interest in the brazen Manhattan killing of United Healthcare's CEO Brian Thompson after a quick-thinking McDonald's employee in Pennsylvania alerted authorities to a customer who was found with a weapon and writings linking him to the ambush. Now, the suspect has been identified by police as 26-year-old Luigi Nicholas Mangione. They say he had a gun believed to be the one used in last Wednesday's shooting, as well as writings suggesting anger with corporate America. And in New York City, an acquittal for Daniel Penny. He's the Marine veteran who used a chokehold on an agitated subway rider in a death that became a prism for differing views about public safety, valor, and vigilantism. Stocks lower across the board. S&P right now down 36, down 0.6%. We've got the Dow down 180, a decline of 0.4. NASDAQ down 137, a decline of 0.7%. The 10-year 4.19%. Gold up $25 the ounce, up by 1%, $26.58 the ounce. And West Texas Intermediate crude up 1.2%. WTI right now at $68.16 a barrel. The other story that we're following, Mondelez International, the snacks and sweets company, is said to be exploring an acquisition of chocolate maker Hershey in a potential deal that would create a food giant with almost $50 billion in combined sales. Bloomberg's Crystal Say says both companies tried to merge in 2016, and the second time around may still not be a slam dunk because of the Hershey Trust.
The trust owns almost all of the Class B share, giving them superior voting rights, and they essentially can veto any transaction that they do not like. And on top of that, given the structure of the trust, the Pennsylvania Attorney General has to sign off on any transaction. So given the change of administration,
my general advice is continue to seek out companies or people that are maybe one stage or two stages ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down the path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to like build a path towards that. Almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
When I was younger, I used to be in bands. I'd play drums in bands and toured America with them, did a lot of session drumming, recorded albums. So yeah, it was good fun doing the drumming. The reason I stopped it, well, I still play, but not as serious as I did when I was younger, but drumming doesn't pay the bills. I was never good enough to be able to pay the bills with it, but it was good fun. I started RJF, and the reason I started it was I saw a gap in the market for particular early stage and startup businesses. With the experience that I've got of running businesses, of being a finance director at the very biggest companies in the world to being finance director of small startups, we were looking at providing more than just basic accountancy services. So yes, we'll do all that. We'll do all the basic, all the statutory side of things that you need to do. But there's so much more value that we can add, and I wanted to have my experience to help these startups, because a lot of them don't really know where to go. You can go to your high street accountants and they can do a good job compliance-wise, but you would question whether they've actually been in the firing line of a business. Have you been in a business where you're thinking, how do I pay wages next week? Or business is really successful, what do we do with it next? Or how do we grow it? How do we grow into international territories? Or how do we grow our markets? How do we expand? So a lot of the experience I've seen over the years and seen different types of business in different sectors, I thought, well, it's a real value that I can add to these businesses as opposed to just being an FD, because a lot of these businesses can't afford an FD. But if we can take care of their statutory side of things, the compliance side of things, I'm on hand to be able to help and advise businesses with their growth strategy, or if they're in difficulty, help them through these times.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
This euro-dollar thing, specifically why the euro is acting all tough, even with all this, all this craziness happening over in France. We've got this analysis from Pound Sterling Live called Euro-Dollar at Inflection Point.
Yeah.
Pretty fascinating. The main thing is the euro is holding strong, even with all this negative news coming out of France.
Yeah, it is. It's definitely interesting to see all this talk about the French government maybe collapsing, but the euro is still, like you said, trading above that November low of 1.03330.
Like you think with all that uncertainty, the euro would be like tanking.
Yeah.
Right? One of the experts they quote in the article, W. Brad Bechtel, he's the global head of FX at Jefferies LLC. He said the negativity priced into the euro right now is it's extreme.
Yeah, and he makes a really good point. Even with all that, like you said, the euro hasn't plummeted to 1.0000. So what's going on? Well, maybe the market is like overreacting to the negative news. Maybe they're underestimating how a caretaker government could keep things running smoothly.
That makes sense. So let's break this whole French political thing down. We've got this no confidence vote coming up. It could totally take down Prime Minister Barnier's government. And then we could be looking at a caretaker government until the elections in July 2025. So how does all that impact the euro?
Well, Tara Mar, an analyst from HSBC, he thinks the markets are staying pretty calm because, like we said, a caretaker government could keep things moving, just delay those really tough decisions for now.
So basically kicking the can down the road, but could that actually end up hurting the euro, in the long run? Like maybe they can't address any economic challenges.
For sure. That's definitely a possibility. And Mar actually points out that the EU Commission's reaction to this whole situation is really important. They could be worried about a caretaker government being able to handle France's money right, and how they react could really shake things up in the currency market.
Okay, so we got this political drama, but the article also looks at some technical analysis.
Right. Tenmei Purohit. He's a technical analyst from Societe Generale. He thinks the euro might actually bounce back. He's looking at the mass ED indicator. The thing that uses moving averages to spot buy and sell signals. Well, right now it's saying the euro's downward trend might be shifting.
So not a clear buy signal, but maybe more like a flashing yellow light.
Exactly. Purohit says there are a few key levels to watch. First, 1.0610 to 1.0635. If the euro breaks above that, it could really bounce back. But if it drops below the recent low of 1.0330, that could mean further decline.
So it's kind of a make or break moment for the euro?
Yeah. It really is. Pure had even pointed out a couple potential support levels if things go south. 1.0000 and then a really important zone around 1.00070 to 1.00000.
So we've talked about the French political scene and what the charts are saying. Are there any other things that could affect how the euro does?
Well, the article says if we see some bad economic data coming from the U.S., that could actually help the euro. Remember, currencies are all about relative strength.
So you mean if the U.S. economy starts looking shaky, the euro might look better by comparison.
Right.
And there's a big event coming up that we need to watch.
The U.S. jobs report. It could really change things one way or the other.
Okay, so we've got this French political situation. The technical signals from Puro hit. It's kind of a lot. But it sounds like a weaker U.S. economy could actually be good for the euro.
Yeah, that's right. It might seem kind of weird. But currencies, it's all relative, you know? If the U.S. economy starts to struggle, the dollar could weaken. And then the euro, it starts to look more attractive to investors.
Even if the Eurozone itself isn't doing great, it could still benefit from a bad U.S. economy.
Exactly. Perception is everything. It's all about relative performance. And that's why this U.S. jobs report is so important. It really tells us about the health of the U.S. economy. If the numbers aren't good, it could send the dollar down and give the euro a boost.
It's crazy how all this stuff is connected. French politics, U.S. jobs reports,
Yeah.
and the euro-dollar exchange rate.
Right. Currency markets are so dynamic, they're constantly reacting to global events, economic indicators. It's fascinating.
So if our listeners trying to figure this all out, this whole euro-dollar dance, what's the main takeaway?
I think the big thing is we're at a really important point. There are good arguments for both, a euro bounce and further decline. You've got the political uncertainty in France, and then these potential economic surprises in the U.S.
We're standing at a crossroads, and we don't know which way the euro will go.
Yeah. And that's what makes currency trading so challenging.
Right.
But also potentially rewarding. You have to weigh all these factors, the risks, and make smart decisions based on the best information you have.
Makes sense.
Yeah.
So beyond what we've talked about, are there any other things, any other global factors that could throw a wrench into the euro's trajectory?
Well, there are always things that can happen, things you don't expect. Global trade tensions, geopolitical risks, even central banks changing policies, all that can affect the euro-dollar exchange rate.
So it's all about staying informed and understanding how everything fits together.
Exactly. The more you understand about global events, economic forces, the better you'll be able to navigate the currency markets. And hopefully, this deep dive has given you a good place to start.
It definitely has. It's a good reminder that in the currency markets, things are rarely clear-cut.
You got it. There's always more to the story.
Well, thanks for joining us on this deep dive into the euro-dollar exchange rate. Hopefully you've learned some valuable insights.
It's been great sharing these ideas with you.
And remember, stay curious, keep learning, and maybe we'll see you on our next deep dive.
So it sounds like you're saying even with all this analysis predicting the future of the euro-dollar exchange rate is like still kind of a guessing game.
Yeah, kind of. I mean, there's just so many things that could happen that it's impossible to know for sure. But that doesn't mean we can't make good decisions.
Right.
By understanding, like we talked about, you know, the economics, the politics, recognizing patterns and being really careful about risks, we can definitely improve our chances.
It's not about like seeing the future. It's more about understanding the game and being smart about it. Exactly. And that's what this whole deep dive is all about. We've looked at the important stuff that affects the euro-dollar exchange rate, those potential catalysts, even some of the technical signals.
So for our listener out there, what's the most important thing to take away as they try to navigate these currency markets?
I think the biggest thing is to stay informed, keep up with the global economic news, pay attention to what's going on politically, and don't be afraid to really dive into the technical stuff. The more you know, the better decisions you can make.
And maybe even find those hidden opportunities.
Exactly. Remember, knowledge is power, especially when it comes to currencies.
Well, on that note, we want to thank you for joining us on this deep dive into the euro-dollar exchange rate. We hope you found it helpful and interesting.
It's been great sharing these insights with you.
And remember, stay curious, keep learning, and maybe we'll see you on our next deep dive.
Right.
Yeah.
But yeah, what happens in New York City is not necessarily what happens around the country.
Right. So it's as much power as a million homes just for this one.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, and NASDAQ all lower across the board. 20 minutes to go ahead of the closing bell. Right now, let's head over to the first word breaking news desk for today's afternoon call. And here she is, Felice Morantz.
Good afternoon, Charlie. Stocks remained under pressure throughout the day as NVIDIA dropped after China hit the company with a regulatory probe. The Dow was down 0.4%, S&P 500 down 0.6%, and NASDAQ 100 down about 1%, with the U.S. 10-year yield at about 4.2%. 7 of the 11 main S&P 500 sectors were trading lower, led by communications and financials. Healthcare and energy were in the green. United Health shares rose after the police arrested a person of interest in the fatal shooting of a company executive. Some $40 billion of deals were announced today, including Omnicom agreeing to buy Interpublic, and Mondelez was said to have approached Hershey. Oracle is slipping while homebuilder Toll Brothers is rising. Both are due to report earnings after the bell. Live from the First Word Breaking News Desk, I'm Felice Morantz. Charlie?
All right, we thank you very much, Felice Morantz. And to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Well, TikTok, everybody, look at that. We got less than 20 minutes to go to the close of trading. We just heard the numbers from Charlie, but worth checking them out one more time. The NASDAQ down 0.7%, the S&P 500 down 0.6%, the Dow down about 0.4%. Let's drive to the close with Alan Zafrin, founding partner and co-CEO over at IEQ Capital, joining us from the West Coast today. Alan, how are you? Welcome back.
Thanks, Tim, and Katie as well. Thanks for having me again on the show.
Yeah, it's really good to have you. Hey, where are we right now? Because we haven't spoken to you since the election last month, and I'm wondering how your model shifted, if your model changed at all, with Donald Trump winning another term.
Honestly, elections don't make the markets. Profits and interest rates and inflation make the markets. We really haven't shifted much. What we thought. Between both administrations, the biggest aspects of change were relatively minor. You might have seen a marginally higher corporate tax rate under Kamala Harris Democratic-led Congress. You're likely to see corporate tax rates stay the same. You're likely to see personal tax rates stay the same as well. All things equal, you can argue continued forces towards nationalization of some industries, particularly if there's some tariffs put on place, will make U.S.-centric businesses, particularly smaller, mid-cap, more manufacturing industrial businesses might be beneficiaries. And on the negative side, you might see less of an influence on climate change friendly and EV friendly businesses. But frankly, markets moved to the tune of the economics, and we really didn't shift materially portfolios because of the pending or subsequent outcome of the election.
Well, let's talk a little bit about what this could mean for the inflationary landscape potentially. It was really telling, I think, when we got the University of Michigan sentiment numbers on Friday. And in that, of course, was one-year inflation expectations, which came in at 2.9% versus expectations of 2.7%. And the explanation that I saw was basically that you have consumers anticipating that prices could be higher if some of these proposed tariffs go into effect. How are you thinking about that, Alan, when you take a look at the course of the next year or so?
I'm going to answer you twofold. Our belief is that tariffs are a bunch of bluster and a negotiating tactic, and they may in fact come in place, but they likely are not to come up nearly as high as being currently bandied out in the press or by any potential representatives of the incoming administration. But in fact, the tariff is inflationary, so we need to acknowledge that. Secondly, what we need to acknowledge is the economy is actually, despite everything thrown at it, still pretty robust, and even modest increases in inflationary pressures, whether it's through tariffs or some semblance of policies that don't bring as much immigration net into the U.S., force up inflationary pressures. And we highlight what we think the biggest fundamental risk in the market is an unexpected rise in longer-term rates which would, if that were to occur eventually, put into question the higher than historically average valuations we see placed on most public equities across the board right now. So it is a concern. It's not enough to materially shift portfolios, but it's something to be wary of. And if we saw persistent inflation trends working higher, we'd have to rethink both the duration or longevity average weighting of our bond portfolios. We might want to shorten them. And we'd also have to think long and hard about, should we have a full equity exposure, or do we need to trim a little bit?
The immigration side of this is something I want to home in on, because I do wonder, even though the president-elect has reiterated that he will go through with this, logistically it could be a challenge. But I also think it could be a challenge and a hit to the economy if you remove so many people who are working and working for less than an American born in the U.S. or an American citizen would work for.
That's inflationary. If you want to step back.
That's what I mean.
Classic. Yes, it is. Of course it is. When you're, in theory, across an entire globe, not bringing in necessarily the most highly skilled people to deliver the best service or build the best product at the lowest possible unit cost, you're in fact driving an increase in labor cost or inflation. Of course, to a degree, the counter push to that is all the way going back to NAFTA. The moment we began to outsource what were previously American-based jobs, like it or not, we disenfranchised or a select set of individuals in America, and or further bifurcated the haves and super wealthy from the have-nots. And there might be some political willpower to deal with modestly higher inflation for the sake of an attempt to rebalance to a degree the socioeconomic differences across the entirety of our population. We could have a debate about whether that's prudent or not, but you're right. It is, in fact, a bit inflationary if you mitigate to some degree a flow of labor at a lower cost for each unit of product or service that you deliver.
So let's talk more directly about the stock market. Of course, a lot of unanswered questions when it comes to, the economic impact of some of Trump's policies. But I do want to get your thoughts on an interesting note that came out this morning when it comes to John Stoltzfus, of course, raising his price target for 2025 to 7,100. That is one of the most bullish calls out there. And it was interesting that a lot of this call rested on AI, that he thinks that this is a watershed point for technology, and that basically the improved productivity that could come as a result of it will further serve the needs of businesses across sectors, that we could see every sector in the S&P 500 benefit from AI. How are you thinking about AI, the potential disruption there, both positive and negative, when you're putting together a portfolio and thinking about the year ahead?
So it is remarkable the price target was put that high given current valuations, but that is the basis that will drive earnings growth. Just for the record, forecasts for 2025 and again in 2026 consensus are calling for earnings growth per annum of close to 14 or 15%, which is much higher than historically average. And so part of that is an element of AI-driven productivity improvements and faster than average earnings growth. The way we specifically think about it is twofold. One is, by virtue of investing in a well-diversified public equity index, you're capturing the preponderance of AI revenue-generating capabilities from those magnificent 8 or so companies that are the biggest direct beneficiaries. Secondly, particularly out here in the California and the Silicon Valley, we see a preponderance of private companies focused on AI. And the way we think about it is not dissimilar than the internet craze in the late 1990s. AI is going to be around just like the internet was around. There are going to be big winners, just like there were in the internet, but there are going to be many, 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 many more losers. And it's incredibly challenging to discern the winners from the losers. So if you don't have a better course of action, broadly diversify yourself and get ample exposure, you'll end up ahead. But your ability to discern the specific winner or winners is going to be incredibly challenging in an exceptionally dynamic and fast-moving marketplace, both public and private.
Alan, we only have 20 seconds, so I'm remiss even to ask this, but it's like, do you see any parallels between what happened now and the late 90s, just very briefly?
Yes, we are seeing a parallel, but I don't believe we're at near the peak of what we witnessed before material drop like we did in 1990 and 2000. I don't think we're close to that point yet.
Alan Zafran, founding partner and co-CEO over at IEQ Capital. Always love it when Alan joins us. Alan out there in California. Coming up next, we're counting you down to the close. It's Bloomberg's The Closing Bell right after this.
This is Bloomberg Business Week with Carol Massar and Tim Stenivek on Bloomberg Radio and Television.
It is Bloomberg Business Week. I'm Tim Stenivek. That is Katie Greifeld in for Carol Massar this afternoon. Katie, today is a big day.
Yeah, go on. It's December 9th.
Apparently,
yeah.
Taylor Swift has wrapped up that Eras tour. 150 shows.
Over 2 years.
54 cities, 5 continents.
Did you make it?
I did not make it, but you did.
I did.
Not in this country.
No, I went to Canada for. We went to Toronto like 2 weeks ago.
Okay.
I think it was the
How
weekend
was it?
before Thanksgiving. It was insane. I knew it was going to be long. It was super long. It was over 3 hours. I was tired just watching her. I don't know how she's been doing this for 2 years. I was thinking she doesn't even have commercial breaks. You know, it was really. It was an athletic performance, but it was also visually stunning as well. It was fantastic. My husband, who likes Taylor Swift, isn't like that into Taylor Swift, I would say, was really impressed. The production was amazing. I also went with my brother and my sister-in-law. It was just a good time. And the concept of an Eras tour, I'm talking a lot. The concept of an Eras tour.
Well, I haven't been, so you need to.
It's so smart. If you have the discography to back it up, why not play your greatest hits from all the different eras of your career?
It's amazing because she's only 34 years old.
I know.
And we're talking about her like she's had this decades-long
But she
career.
has.
I know she has.
She's been in the game.
Since she was a teenager.
My first Taylor Swift
And it was a very
song-
different Taylor Swift in her early years.
Yeah, I first heard her when I was 12, Love Story. I think that's when it came out. So she's just been in the game forever. And her body of work is so impressive. She didn't play every song she's ever made, and she actually shortened a lot of songs to fit everything in.
Any special guests show up when you were there?
Gracie Abrams was the opener,
Okay,
which
that's
is
cool.
pretty good. I'm sure you don't know who Gracie Abrams is? Well, she's the daughter of J.J. Abrams, who you've
Okay.
probably heard of. She's
Yeah,
really big.
movie
right now,
guy.
on TikTok. She
Okay.
actually has like at the time, she had the top charting song in Canada because she just released a new song.
Okay.
Yeah.
Cool.
But it was really cool. And Taylor Swift made a ton of money.
Yeah, definitely. The economic impact also was pretty big.
Yeah.
Think about it. You flew up to Toronto,
Sure did.
stayed there for a couple days,
Just one night.
bought some friendship bracelets.
Yes. That I got from Amazon.com.
Okay.
But no, we went out to dinner, etc.
Was it worth it? The whole thing?
Yes, absolutely. I would have actually liked to see Toronto a little bit more, but we were in, out, had to get back to work. So it was pretty quick, but it was amazing. I hope I wonder what the next Taylor Swift tour looks like. This is going to be pretty hard to top, to go from the Eras tour to just a regular I released an album tour. It'll be an interesting move.
Yeah. We'll see what happens.
Yeah.
Considering how long it took her to get ready for this one and what went into it.
I mean, it's amazing how long it's been going on because she's put out albums since, in the midst of the tour.
It's the way that she's so prolific.
Yeah.
I remember during the pandemic, it was like album after album after album.
It was great.
And with some pretty incredible collaborators too, like Bon Iver.
Bon Iver,
Yeah.
perhaps,
Yeah.
who you're a fan of.
Big fan.
Topped your chart.
Top my Spotify list, but
Yeah.
we're not talking about me. We're talking about Taylor Swift.
We are. She was my #1 artist.
Oh, she was. That's right.
She's been in my top 5 for a long time, I would say. This year, I think she was #1 just because she put out a new album, so I listened to it a lot. Ariana Grande was #2 for me.
Okay.
She put out Eternal Sunshine back in March. Did you catch that?
Nope, did not catch that.
Okay, interesting. And then Third Eye Blind was my #3.
Okay.
Yeah.
Cool. I had the National up there on my list
I'm
as
sure
well.
you did.
Yeah. Hey, taking a look at markets right now as we get close to the top of the hour.
You're right.
We're still down 0.7% on the S&P 500. The NASDAQ down by 0.7% as well. NVIDIA certainly weighing on these indices. Katie's favorite, the Dow Jones Industrial Average, down a full half percentage point.
Yeah, there you go. You know who should do an Eras tour?
Who?
Bob Dylan. He's too old, but I
I
wish
saw him in concert like 25
I've seen
years
him
ago.
in concert like 3 or 4 times at this point. My dad is a huge Bob Dylan fan.
I love it. Hey, coming up next, we're counting you down to the close. Bloomberg TV team, cross-platform coverage, radio, TV, Beyond the Bell starts now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Scarlett Fu, taking you through that closing bell. A global simulcast. It starts right now. Tim Stenovic in the radio booth, joined today by Katie Greifeld, filling in for Carol Masser. Alex Steele has the day off as we welcome our audiences across all of our Bloomberg platforms to parse the most crucial moments of the first trading day here of the week. A trading day, Tim, where we're seeing stocks in the red.
Yeah, NVIDIA certainly weighing on the trade, but I was just talking to Katie about Taylor Swift because the Eras Tour wrapped up, and Katie got to see Taylor Swift.
Not in Vancouver, did she?
No. In Toronto, though.
Yeah,
it was like one of the final shows.
Yeah, it was pretty amazing, and I'm sad to see it go. The Eras Tour. You think about again the economic impact. Maybe that's why the stock market is down today.
It all comes back to markets.
Yeah, I could imagine some bears making an appearance now that Taylor Swift's Eras Tour is over.
Who's going to stimulate the U.S. economy, the regional parts of the U.S. economy, and be included in the Beige Book now that the Taylor Swift tour is over?
I shudder to think, someone has to pick up the mantle.
Well, we talk about sort of the $2 billion plus or whatever that she's grossed on that tour. I guess the big question is, what does she do with that money? You think she's piling into stocks? Is there some like ETF that Katie knows about, or maybe Bitcoin?
S&P 500. No, I think she's an index investor, Taylor Swift.
Yeah, she strikes me as that here. But look, the idea is that you're sitting on double-digit gains in the equity market. You're sitting on pretty healthy gains, even if you're in fixed income. And then, of course, I don't know, Bitcoin. Tim Stenovic.
Yeah, losing a little bit of momentum today, but still, hovering around above 95,000.
All right, well, I hope she invested wisely so we don't have to go through another Eras Tour all in 2025 as the Dow Jones Industrial Average, the S&P 500, and the NASDAQ Composite all close out the day in the red. The closing bells here in New York as we wait for these numbers to settle. The Dow Jones Industrial Average is going to move lower by more than 200 points, or about 0.5%. The S&P down by more than 30 points, or 0.6%. The NASDAQ down by a similar percentage drop, in the Russell 2000 shedding roughly 16 points, or 0.7%.
The S&P 500, if you pull back the layers of it, it's still getting settled, but we got 230 stocks moving higher today, 272 stocks to the downside.
All right, let's take a look at the sector performances, too, and pull up the IMAP, and there's a lot of red there. The only two sectors that finished in the green are healthcare, up by 0.25%, and real estate investment trust gaining about 0.1%. The big decliners, financials losing 1.4%, communication services and utilities each down at least 1.3% as well.
All right, let's take a look at some of the gainers on the day today. A lot of news when it comes to M&A, potential M&A driving stocks higher. Look at that. Shares of Hershey up close to 11% today. It's the most going all the way back to 2016. At one point today, it was the highest in more than 2 decades, going all the way back to 2002, or the most, I should say, going all the way back to 2002. It is the highest going back to September of this year. Shares of the Hershey Company surging after Bloomberg reported that the snacks and sweets company Mondelez International is exploring an acquisition of the company. Our Bloomberg News team reported that Mondelez has made a preliminary approach about a possible combination, said the people who asked not to be identified, but because the discussions are private. We talked to Crystal C a little earlier. She's Bloomberg News Deals reporter. We don't know a lot about the numbers here, but the idea, of course, has to do with scale, declining business when it comes to snacking, fears of Ozempic, rising cocoa prices. This has been attempted before, back in 2016, I believe, so we'll see if it ends up happening now in 2024. Also, shares of Interpublic Group, speaking of the world of M&A, the advertising and marketing company Interpublic Group surging after news that Omnicom would acquire the company, creating the world's largest advertising company. Shares higher today by about 3.6%. The deal values Interpublic at $13.3 billion, excluding debt. It'll create a company with a combined annual revenue of over $25.6 billion. And shares of Workday also rising today. This as it's set to join the S&P 500, shares higher by 5%. We learned this after the close on Friday. Inclusion, though, in the benchmark, it's becoming more important for companies in a world that's increasingly dominated by passive investment funds. Maybe Taylor Swift is an index investor. On the flip side, expulsion from a benchmark can weigh on stock prices as passive investors are forced to sell the shares that realign with the S&P 500's new composition. Shares of Workday higher by about 5% today, Katie.
To be clear, it's not disparaging to say Taylor Swift is an index investor because the S&P 500 is up 28% and then
the smartest move you could have made over the last decade, right?
Exactly. Well,
but does she follow SPY or the Qs?
It's a good question. Probably SPY, but again, I don't know this woman. In any case, let's take a look at some of the decliners today. We start with NVIDIA weighing on the big benchmarks. NVIDIA shares down 2.6%. That's after news that China has opened an investigation into NVIDIA over suspected anti-monopoly law violations related to that 2020 acquisition of Mellanox Technologies. And then Tim was just talking about this, of course, Omnicom to buy Interpublic in a deal that would create the biggest ad company. We don't have a price tag yet. The final price will be based on Omnicom's share price at the time of the deal's closing. That's expected to occur in the second half of 2025. But investors anticipating here that maybe it'll be a big one. Shares down double digits. And then I did want to end with T-Mobile. This was interesting. We heard from the CEO saying to be cautious about fourth quarter results. Basically, investors hearing that and selling, even though the CEO also said that results will be back-end loaded due to year-end factors. Shares finishing down about 6% or so.
Yeah, interesting comments from the T-Mobile CEO, and a quick honorable mention. Shares of Kimberly-Clark down about 1% on the day. This after we learned a little bit earlier during the start of the show that Costco is switching manufacturers for its Kirkland brand diapers, which had been made by Kimberly-Clark.
Costco moves markets.
Now that's being replaced by First Quality to do that. Let's take a quick look at yields here. Basically, seeing modest gains across the board for yields, up about 2% on your 2-year yield, the most rate-sensitive portion of the yield curve, just about a week or so away from that next big Fed decision. Your 10-year still camped out right around 4.2%.
We are waiting several companies to report earnings. We're waiting on Oracle, set to hit just in the coming minutes. Vail Resorts, also MongoDB, C3AI, Toll Brothers coming a little later for a look at least one part of the housing market. In the meantime, I do want to talk a little bit about the way that NVIDIA has been weighing on markets today. We do know that China has opened a probe into NVIDIA. The idea is that there's suspicions that the U.S. chipmaker broke these anti-monopoly laws around a 2020 deal. It takes aim at the company as Washington steps up sanctions. Also raises questions what happens, Scarlett, when a new administration comes in January.
All right, let's break down some earnings. We just got results from C3AI. This company reporting a loss for the quarter, adjusted loss per share of 6 cents. Analysts were looking for a loss of 16 cents, so this is narrower than what was anticipated. It also raised its guidance for the full year as well, for the full year 2025. So you look at the stock price right now, the knee-jerk reaction is a big bump up of about 10% in after-hours trading.
Oracle's fiscal second quarter results are out. Cloud infrastructure revenue in line with estimates, $2.4 billion. The street was looking for, well, $2.4 billion. The share has taken a little bit of a leg lower here, despite the fact that adjusted revenue overall was up in the quarter, up about 9% to $14 billion, though that was just a touch shy of the average of street estimates. You see it there, 14.06. The street was looking for 14.12 in the most recent quarter. Operating margin relatively in line at 43 cents, and your bottom line number, 2Q adjusted EPS, $1.47. The street was looking for $1.48, so it looks like either in line or modest misses on most of the key metrics for its fiscal second quarter. Still coming through the release now to look at the outlook.
Okay, you guys are watching C3AI and Oracle. Oracle down by 6%. I'm looking at shares of Vail Resorts higher right now in the after hours by close to 5%. Shares down 10% so far this year. The company sees fiscal year total reported EBITDA $844 million to $906 million. First quarter total skier visits coming in shy of estimates at 548,000 versus estimates of 610,538. The company does see fiscal year net 240 million to 316 million. Saw 224 to 300 million, and that's probably one of the reasons why the stock is higher. First quarter net revenue coming in at 260.3 million. That beats estimates of 252.9 million. First quarter loss per share coming in below estimates at $4.61. Estimates were for $5.03. Shares now higher by about 3.3%.
All right, let's also check in on MongoDB. It develops software, database software. You can see it beat on a number of measures. The third quarter revenue beat estimates pretty handily, $529 million. The expectations had been for a share lower than $500 million, and some movement too in the C-suite. COO and CFO Michael Gordon to step down here. You add it all together, see how the shares are reacting up mightily right now, almost 10% after hours. But guys, heading into this print, MongoDB shares down by more than 14% year to date.
All right, so we are still getting earnings. We'll get Broadcom a little later this week, Costco as well, Adobe coming on Wednesday. Before we get those numbers, though, we will see you guys back here, same time, same place tomorrow. That is going to do it for our cross-platform coverage of the closing bell on radio, TV, YouTube, and Bloomberg Originals. We'll see you tomorrow, guys.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
It is Bloomberg Business Week. That's Katie Greifeld in for Carol Masser. I'm Tim Stenivek. Don't know if you caught this story earlier today, Katie. Claire Ballantyne, our Bloomberg News colleague, reporting that women are controlling ever greater sums of money around the world, setting the stage for major shifts in wealth management and philanthropy.
You know, I didn't catch that article specifically, but I have heard that. I mean, that's a conversation we've had with Sally Krawcheck, for example.
At Ellevest, right?
And yeah, exactly. And it's a really interesting stat by itself, but also the implications are important as well.
Yeah, in the U.S. alone, McKinsey expects women to control $34 trillion, or roughly 38% of investable assets by 2030. It's close to double last year's total. For more on private wealth, back with us is Brendan Coughlin, Vice Chairman and Head of Consumer Banking at Citizens Financial Group. Citizens hired many of the private bankers from the old First Republic platform, though they didn't buy First Republic outright. JP Morgan ended up doing that during the regional banking crisis of 2023. Brendan, good to see you. How are you?
Great to see you. Great, Tim. Katie, good to see you.
So give us an update. It's been a few months since we spoke to you. How are things going as you sort of absorb at least some of the personnel from the old First Republic?
It's going fantastically well so far. The market is still incredibly disrupted in looking for a platform to provide world-class white glove service for high net worth and ultra high net worth individuals, which is really the play that we've made, is to lean in there and fill the white space that was left behind. And many banks will suggest that they're customer focused, but in this particular space, it's very, very important that you are. And what we find is that the biggest banks in the country have all the sophisticated capabilities to serve those clients, but they're also very big and very siloed and very bureaucratic to bring the full bank together for these clients. Whereas a bank our size, like Citizens, we're big enough to have the sophisticated capabilities, but we're also small enough to actually value the client overall and the sum of their parts, whether it's wealth, personal banking, commercial lending. And so we've really made a tremendous push in here, and the growth has been substantial.
And so you're head of consumer banking, and I'm curious, I mean, you have obviously a unique view into the consumer. We talk about the health of the consumer all the time, but what are you seeing from your perch?
Broadly, I would say the consumer has normalized post-COVID, and the things I look at, spending, deposits, and the health of credit. Spending has been flattish year over year, but that's after a couple of years of booming spending coming off the heels of COVID. We did see Black Friday and Cyber Monday sales up 3 to 4% year over year, so that's a healthy sign that spending is, which is an indication of consumer confidence, so that's good. On the deposit front, customers still have a decent amount of excess liquidity, but the economy has not felt the same across all walks of life. So if you look at mass market or your paycheck to paycheck folks, they basically are back to pre-COVID levels of deposits, whereas mass affluent and affluent are still carrying 20 to 25% more in cash than they were before COVID. So a lot of excess liquidity.
Why do you think that is? Have they just not reinvested it?
You know, for a variety of reasons we hear. First of all, deposit rates are pretty good right now. And so particularly in the bigger banks where they've got confidence that the bank failures of 2023 were really idiosyncratic and it wasn't really going to hit the vast majority of U.S. banks, deposit rates are pretty good. And so they're finding a balance of having some liquid in deposits, some tied up in treasuries and in equities. But there's very much still a fair share in the banking system. And then when you look at the credit side of things, certainly when you look at linked year and linked quarter stats, it looks like credit delinquencies and charge-offs are going up. I would broadly say they are, but it's only getting back to normal pre-COVID, coming off of really artificially suppressed levels, getting through COVID, where people were taking payment holidays and not making student loan payments and so on and so forth. So there's nothing at the macro level I would call out in concern. In fact, even credit cards, which has been a topic of a lot of conversation of consumers relevering, they are up year over year, but they're still 10% below where they were pre-COVID in terms of debt leverage ratios. So overall, the health of the U.S. consumer is still pretty strong, and I don't see any real signs of a breakout of anything deteriorating, at least as of right now.
I want to talk about the consumer in the context of falling interest rates. We were just having this conversation with LendingTree's chief credit analyst, and he made the point that a 25 basis rate cut isn't going to make a huge difference when you think about consumer behavior. Give us some context, though. I mean, what magnitude of rate cutting do you need to see from the Fed before it affects the behavior that you see and you touch?
Well, there's some direct and indirect elements to that. So on the direct side for the consumer, 25 basis points, 50 basis points, 100 basis points, especially on the short end, which is really people usually talk about with Fed funds rates coming down. You'll feel that in two ways. One is lower deposit that you're getting paid, and two is lower debt load on your credit card, a bit more affordability on your credit card. That's not typically tied into mortgage rates, which are more the 10-year Treasury and longer-term rates. Is now you're seeing short-term rates come down, but mortgage rates are still hovering kind of pretty close to 7%, and those are not projected to come down significantly over the next even 12 months. And when you look at 74% of U.S. consumers that have a home loan have rates under 5%. So what would you need to believe for rates to come down to really kick up a refi boom to get a lot of payment savings on your home? You've got to believe that rates come down significantly more than they're projected. So right now we're in this range of rates come down. It's going to be a little painful on deposits, a little beneficial on credit card, probably not transformational. On the indirect side, though, what you'll tend to see is businesses reacting a little faster. If they have confidence we're going to hit a soft landing in the economy, they'll borrow a little bit more, invest in their business. That will drive up employment, drive up confidence, which will trickle into the consumer.
How much, I know you're vice chair and head of consumer banking, but I want to talk about the business side of things, corporate side. What are you seeing from companies, from your corporate clients right now?
They were in a period of time where they were delevering, drawdowns on their credit was really at all-time lows, trying to, in an uncertain, volatile economy, which we were in, where there's a lot of question and variability around, are we going to hit a soft landing, are we going to hit a recession, what's going to happen with inflation? That's generally conditions that make businesses a little bit more cautious, and we saw that through end of 22 into most of 23, particularly with the bank failures and volatile rates. We're seeing that stabilize a little bit more. So the likelihood of missing a recession, of a soft landing, is increasing. Rates easing is a good sign. Inflation, while it's not completely done now, seems to be generally under control. So we're seeing the early signs of businesses starting to have confidence to maybe take out some debt, make some capital investments, stimulate some economic demand. Those are all good signs, and hopefully that continues. And if it does, we should be in a decent spot for a soft landing, as we have hoped.
And I want to talk about your business specifically, because one of the expectations heading into 2025 is that you're going to see a much more friendly regulatory environment, that you're going to see a lot of M&A come back. It feels like we're already seeing a ton of M&A, but that being said, I know that Citizens has made quite a few purchases over the past couple of years. You think about the 5 M&A and equity firms, the mortgage company you bought. You also bought a high-end wealth management firm. When you take a look at the portfolio of Citizens right now, are there any spots where it could make sense to look to those inorganic channels to grow?
Well, I'd also add that we've bought HSBC's U.S. franchise for retail banking, and we also bought Investors Bank in northern New Jersey and Metro New York to round out our footprint strategy. We're making a big play in Metro New York and northern New Jersey. And while the lift-outs of private banking and private wealth is not an M&A transaction per se, we're treating it as such. And so, we're coming on the heels of our 10-year anniversary of our IPO. Right now, we're the #2 stock in the regional bank stocks this year, which is good. And I think that's based on the foundation that we've built over the last 10 years, that it's a solid bank, outperformance on deposits. When you have that confidence, you can selectively play offense. And so we're looking at making a big play in wealth management, in private banking, building our geography in Metro New York, New Jersey, maturing the acquisitions we did on the corporate banking side and M&A. Never say never on M&A. You're right to say the conditions are improving. Rates are coming back down. That was one impediment of making the deal math work on M&A, and then regulatory and political pressures should ease too. So we're on the lookout, but we have a very full agenda, and we don't feel like we have to do a deal of any kind. We think the organic growth that we're on the path to deliver will be distinct for this franchise versus other banks, and we're excited about it.
What about geographic footprint? Just 20 seconds.
Geographic footprint.
Extending it.
We're open-minded to it. It's been challenging for banks to grow their geography organically through retail banking. Now, the addition of the private bank makes it more affordable. Instead of needing 150 branches to compete, we can have 2 or 3 private banking offices. In fact, we just planted a flag in the Bay Area. We opened 3 private banking offices, and the deposit growth has been tremendous. So we are thinking about geographic expansion ex M&A, but through that lens.
Brandon Coughlin, Vice Chair and Head of Consumer Banking at Citizens Financial Group here at Bloomberg headquarters.
4:21 on Wall Street. We do check markets all day long here at Bloomberg. We begin with a developing story. Eli Lilly has approved a $15 billion share buyback, also boosting its dividend. Moments ago, we heard from Oracle. It's out with quarterly revenue that was in line with estimates, but that disappointed some investors who have been boosting the stock by 81% this year on enthusiasm for Oracle's cloud business. Now, after ours, we've got Oracle shares down by 7.6%. As we have been reporting, a 26-year-old man named as a person of interest in the fatal shooting of United Health Group executive Brian Thompson arrested today in Pennsylvania after a 5-day manhunt. The man has been identified as Luigi Mangione. He was recognized while eating at a McDonald's in Altoona by an employee. Also in New York City, an acquittal for Daniel Penny. He is the Marine veteran who used a chokehold on an agitated subway rider. Stocks moved lower today with the Dow, the S&P, and NASDAQ all finishing in the red. Stocks retreated after a rally that put the market on pace for its best year since 2019. S&P 500 index today down 0.6%, down 37 points. The Dow was down 0.5. NASDAQ lower today by 0.6%. 10-year yield 4.19%. The 2-year yield 4.12%. Gold up $26 the ounce, up 1%. And West Texas Intermediate crude up by 1.4%. Briefly, Macy's is unloading its downtown Brooklyn store for $23 million, that according to the New York Post. And the Pierre, a 5-star hotel overlooking Manhattan Central Park, is up for sale, according to sources. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. Well, here at Bloomberg Business Week, we spend quite a bit of time talking about the best business schools in the world. On that list, IE University. It's one of those schools. On this year's Bloomberg Business Week Best Business School Rankings, it comes in at number 11th in Europe, and they're growing. Manuel Muniz is provost at IE University and also chair of IE New York College. How are you?
Hey, wonderful. It's wonderful to be here. Thank you for having me.
Welcome. I say welcome, but part of the big news is that you're growing here in New York. So talk a little bit about, we spend a lot of time talking about international business schools and the way that there are campuses in multiple parts of the world. What we don't often see is European schools expanding here in the U.S. Talk a little bit about the thinking behind that.
Well, so for us, this is a major move because it's not just a campus. So we become the sole members, which is basically where the custodian. We've taken over a college, a pre-existing college here in Lower Manhattan in Soho. So we're a fully licensed higher education institution in the U.S. We will issue U.S. degrees. We're accredited by the Middle States Commission, one of the big accreditors in the U.S. So this is a long-term, serious commitment of ours to have a transatlantic footprint and to run programs, fundamentally graduate programs in the business space on both sides of the Atlantic.
But is it for European students who want exposure to New York? Is it for American students who you want to funnel then into a European program also? Who's it geared toward?
So this is a key question. Our student body, our current student body in Spain is super international. So about 90% of our students are non-Spanish. Many of them come from the US, but many other European countries. So our project here is not so much to come into New York to recruit exclusively American students and maybe compete in a more head-on way with some excellent business schools that you have in New York and in the US. It's about opening New York to our already very international student body. So our students will be able to begin in Spain, in Europe, and finish here, and vice versa. So it's about making the higher education landscape in New York maybe a little bit more diverse than it already is, and bringing a different kind of student to New York.
Well, in addition to the student body, talk to us a little bit about some of the offerings here when it comes to the programs that will be taught.
So the big two areas of focus of the college are business and sustainability. So we're very focused in these two spaces. We have a master's in business for social impact and sustainability. We're going to be launching new programs in finance and in management. We also have a program in sustainable fashion, which was already offered by the college before we arrived. So those are the two areas of footprint, and we think that New York is very strong in these two areas. The business community is significant. The type of experience that we can build for the student in these areas is very significant. So we see real synergies between what we do in Europe and what we're going to be able to do here with that offering.
I wanted to talk a little bit about your other experience. You were state secretary at the Spanish Foreign Ministry.
Yes.
You are an expert when it comes to geopolitics and international affairs.
Yep.
Kind of a perfect day to be speaking with you, given what we saw happen over the weekend in Syria.
Yeah, extraordinary.
What we saw last week with South Korea.
Yes.
Given what we're seeing in Eastern Europe with Ukraine, all against a backdrop of a changing administration here in the U.S. And this idea globally that we're seeing sort of a decline in the belief of institutions, the decline of, quote unquote, liberalism around the world. How are you thinking about this?
So that's another very significant question, because if you think about it, the world seems to be moving in a direction of fracture. This is true politically, diplomatically. There's a more weakened multilateral architecture internationally, but also in the economic side of things, a real fracturing of international trade and investment. So then the question is, what is a European university making such a significant investment in the US and abroad? And the answer to this is that we're really doubling down on our vision of what international university should be about. We should be about building global environments, very diverse environments in our classrooms. Our students, the parents of our students, particularly in the undergrad, they want their children and they want themselves to have these very international experiences. They want to work in different geographies. So we're moving a little bit in the opposite direction of where our geopolitics are headed. Our geopolitics are headed towards fracture, and we're betting on interdependence. And I think this is the mission of academia. I mean, it is in our name. I mean, universities are supposed to be universal. They're supposed to be about bringing diverse points of view, building diverse kinds of learning environments and experiences for the students. So that's how our New York and US investment fits into a broader vision of what universities should be doing. But this is not risk-free because we're rowing a little bit against the current of where our geopolitics are headed.
Well, it's interesting. I mean, it feels like higher education has become politicized. I mean, you think about what happened on campuses across New York City, including throughout the spring. I mean, how are you thinking about that?
Well, so, I mean, it's not just what happened here. If you actually look at, there's a general trend of restriction to internationalization of universities. So there have been caps on international students in Australia, restrictions to teaching in English in the Netherlands, restrictions to visas for students in the UK. So if you take it as a whole, this symphony, sort of this concert of fracture, of growing, to some extent, nationalism and nationalistic policies is really trickling, I don't know if it's trickling up or down, but it's beginning to affect the higher education landscape. So we see this with concern, and we are willing to go against this trend, because I tell you, I mean, the value add of an education is significantly higher if you can build these different avenues, these different experiences. I'll give you a very specific example. Because we have the college in New York and it's going to be issuing American degrees, one of the huge benefits to our students is that they're going to be able to come study here, be embedded in New York, and once they graduate, they have a much easier access to the U.S. labor market if U.S. employers are willing to employ them through OPT schemes and others. No? This is the sort of thing that people in Germany, students in Germany, young people in Italy, young people in Canada really want. They want to be able to access universities and have these very different paths that open environments for them, professional, entrepreneurial environments. So, you know, we're going to fight this, you know, through how we behave as a university.
Do you think, you say you're going to fight it, you say that fractionalization is what's happening right now, but not necessarily the way that you see things going, at least at an academic level. Is this move toward populism around the world, especially in Europe and the United States, is this something that you see as a blip and short-lived, or is this something that is sort of the next era of our lives?
Well, so this requires a deeper answer, no? Because the question, I think the core question is, why are we seeing in a lot of the Western world, in advanced economies and liberal democracies, why are we seeing the rise of the extremes in the right and in the left, and the rise of populism?
Or the right and the left coming together to oust a prime minister in France, like last week.
I mean, this is part of this noise, of this symphony of disorder that we're living in our politics, and that it's affecting higher ed. If I had to summarize in one phrase why I think this is occurring is, if you look at the economic performance of advanced economies around the world over the last 30 years, you will see that there is one trend that repeats itself in many of these countries, and that is the hollowing of the middle of our income distribution through stagnation or income decline in real terms. That disappearance or that weakening of the middle is highly correlated with the disappearance of the middle of the political spectrum. So these trends are highly correlated. We simply do not know how to sustain an effective, liberal, deliberative democracy if the middle is under immense pressure. And the middle classes in most advanced economies are growingly precarious. They have difficulty accessing fundamental things. In fact, education is one of them because it's been getting more and more expensive, but housing, healthcare, and many others, they view the future with greater concern. And one of the factors that is most highly correlated with support for populist forces is concerns about the future. So we live in a pessimistic environment about the future, one's own future, the future of the next generation, and that is driving our politics. So unless we address the underlying drivers of this fracture, our politics, the ripples of this in our politics and in our international politics, because this is shaping foreign policy, will become more and more severe. So I think it's a social contract, social justice, equity question that really lies beneath the issue that you raised. Yeah.
So, I mean, you talk about this hollowing of the middle class and the correlation there that you've seen. I mean, do we have any good examples, I mean, in your academic work of where that hollowing has happened but successfully has been made robust again? I mean, are there any good examples that we can look to?
Well, it's very tough because I would say for the first time, and when I served in the Spanish government, was right around the time where we made this diagnosis, where this diagnosis was properly configured. Because 2016, 17, we had a number of shocks. We had the Brexit, we had the first Trump presidency. It was very unexpected in many ways. No? But nobody, I mean, there was really no consensus around the world as to why this was occurring. So the consensus is recent, this diagnosis that I just laid out. But I think if you went to the World Bank or the IMF or the Commission, now they'll tell you we have an equity and sustainability, sort of social sustainability issue in our society. So everybody's trying to implement policies that tackle this, like, for example, measures that change taxation, measures that implement better competition mechanisms, the strengthening of the welfare state in many places. So they're all trying. I don't think any government has the full recipe to address this, but we're all clearly, almost irrespective of the political color of the government, trying to bring growth to the middle.
Manuel Muniz, Provost at IE University, also Chair of IE New York College. Thank you so much for joining us. Do appreciate you taking the time this afternoon. I do want to look at shares of Oracle, down about 6.8% in the after hours. The company reported quarterly revenue in line with estimates. It disappointed investors, though, who've boosted the stock by 81% this year on enthusiasm for Oracle's ascendant cloud business. Shares fell as much as 8%, down about 6.7% right now.
Yeah, I mean, the bar was so high for Oracle. You talk about its year-to-date performance. That was the best yearly performance, or poised to be, since 1999. These results had to be perfect plus.
Party like it's 1999.
I always do.
You always do. More Business Week next.
Street. We do check markets all day long here at Bloomberg. After the close of trading, we heard from Oracle. Shares now lower by roughly 7%. Oracle did report quarterly revenue in line with estimates, disappointing investors who have boosted the stock by 81% this year on enthusiasm for Oracle's cloud business. Again, after hours, right now we have Oracle trading lower. Oracle after hours down by just about 7%. A 26-year-old man has been named as a person of interest in the fatal shooting of United Health Group executive Brian Thompson. He was arrested today in Pennsylvania after a 5-day manhunt. He is identified as Luigi Mangione. He was recognized while eating at a McDonald's restaurant in Altoona by an employee. And in New York City, an acquittal for Daniel Penny. He's the Marine veteran who used a chokehold on an agitated subway rider in a death that became a prism for differing views about public safety, valor, and vigilantism. Turned out to be a down day today for the Dow, the S&P, and NASDAQ, retreating from records. S&P down 37, drop of 0.6%. The Dow down 240, down 0.5. NASDAQ down 123, a decline of 0.6%. The 10-year 4.19%, the 2-year 4.12%. Spot gold up 1%, 26.60 the ounce, and West Texas Intermediate crude up 1.5%, 68.19 a barrel. Bitcoin today down 2.5%. Now, what about investors in last month's presidential election? That question for Alan Zafran, founding partner and co-CEO at IEQ Capital, who was a guest right here on Bloomberg Business Week.
Elections don't make the markets. Profits and interest rates and inflation make the markets. We really haven't shifted much. What we thought between both administrations, the biggest aspects of change were relatively minor. You might have seen a marginally higher corporate tax rate under Kamala Harris Democratic-led Congress. You're likely to see corporate tax rates stay the same. You're likely to see personal tax rates stay the same as well.
Alan Zafran, founding partner, co-CEO at IEQ Capital, a guest right here on Bloomberg Business Week. Recapping, S&P down 37, a drop of 0.6%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie Pellet. Just continuing with the story that Charlie mentioned, that 26-year-old man named as a person of interest in the fatal shooting of United Health Group executive Brian Thompson, arrested in Pennsylvania today after a 5-day manhunt. Luigi Mangione, who was found with a manifesto, multiple fake IDs, a so-called ghost gun with a suppressor, similar to the one used in the shooting, this according to police. While the police investigation unfolds, the $500 billion healthcare company is simultaneously trying to cope with the personal tragedy of losing a top executive and a spiraling PR crisis that risks long-term reputational harm in a country where so many have turned against it. Interviews with people familiar with the event show a company under siege. Bloomberg News health reporter Madison Muller joins us here in the Bloomberg Interactive Brokers studio, part of the team that worked on this huge story from our healthcare team here at Bloomberg News about what United Healthcare looks like, and also kind of a TikTok of the events leading up to that day, the morning of, and what happened later on Wednesday. Madison, good to have you with us this afternoon. What did you and the team learn about what's going on inside United Healthcare?
Yeah, it's been a lot of calls, just, talking to people within the company, talking to people who are familiar with the company, who knew Brian, to try to piece together what happened, what the company knew when they knew it, and what my colleagues and I found out in this reporting process was really that there was a period of time in the morning when something happened outside of the hotel venue where they were hosting this investor conference, and executives had seen some police cars, knew that there was something that happened, but it wasn't until a couple hours later, really, that they knew that one of their colleagues had been shot, and they knew that there was a really serious incident at hand, and that's evidenced by the investor conference starting and then sort of abruptly stopping. And now it's I think there's a lot of confusion within the company with employees, confusion of, feelings of confusion, how do they cope and deal with this tragedy while also dealing with the torrent of online hate from people who are, there's a lot of outcry about insurance companies and anger and, sort of like piecing together, how you're an employee of this company with seeing how upset people are online and the reaction from executives. So there's a lot going on.
Yeah, a lot to unpack too. I will just say I really always appreciate reporting such as this to make the story more human, if it needed to be more human, that, Brian Thompson didn't show up for his hair and makeup appointment, and that's how they, initially knew that something was really amiss here. Definitely brings you into the story a little bit more. But talk to us more about the reaction on social media, because it has been just wild. And I mean, I think about my parents who aren't on social media asking me about it. Like, is it true? Is there that much hate online? And there really is. It's hard to exaggerate.
Yeah, no, it is everywhere. And now we're seeing, now that, this person has been taken into custody, we're seeing support for him. People saying, why did someone snitch on him and say that he was at this McDonald's? Like, it's just a really shocking response. I mean, there was the hate, now there's the support for this person of interest that they've identified. So I think it's an important conversation to have, and I'm sure insurance companies are looking at this and saying, how do we communicate better with the public? Like, what type of conversation do we need to be having about our business? Because it is, the reaction on social media has been crazy, and it is just everywhere.
There's a fundamental tension, though, when it comes to the role of an insurance company and its customers and how it does when it comes to financial metrics that investors care about. Mm-hmm. The more claims that a company approves, the more money that it pays out to doctors and to patients, the more that will hit earnings. And when that hits earnings, investors are not as happy about the company's performance. So the system here is one that I think is getting a lot of attention, Madison, as a result. It's not like people choose their insurance companies. You go work somewhere. Maybe you have a choice of different plans within that insurance company. But this is the system that we live in.
Exactly. And employers also play a role in this, as you mentioned. Like, they opt in to cover certain services. We talk about this all the time with weight loss drugs. I mean, bring it back to the thing that I'm talking about most days when there isn't a murder within healthcare. But people get upset about the fact that their insurance won't pay for weight loss drugs. Well, some employers don't opt in to cover weight loss medications. That's been a big thing this year. So it's multifaceted. There are different parts of this, and I think that one of the problems, which we talked about earlier this week, I think it was last week, is the fact that there is just a lack of transparency and understanding about how this industry works. And so there's a lot of frustration and confusion and anger, and it's just directed at the insurance companies.
I'm also curious, to bring this into our world at Bloomberg News, what the reaction on Wall Street has been. Shares were down 10% in the days following the shooting. You were seeing some sell-side notes talking about the shadow that it's cast over the insurance industry. What are you seeing and hearing?
Yeah, so Jared Holes, who's a healthcare equity strategist at Mizuho, wrote about this, and he said that it's cast a dark shadow over the industry, and that he said we believe the majority of the pressure, if not all, is related to the idea that the crime was based on some level of dissatisfaction with the insurance industry. So again, comes back to this idea that now we're seeing the blowback of this incident sort of affect the shares as well, and this dissatisfaction and this anger toward the insurance industry is something that this industry is going to have to cope with going forward. It's something that this incident has brought to light, and even if we have a person in custody, it's something that conversation is going to continue.
You and the team write that United Health, it's the country's largest insurer, is known among those in the industry as a place with sharp elbows. It's unafraid of high-profile legal battles or tough negotiations with medical providers. On Wall Street, the company gained a reputation for reliably hitting and usually exceeding financial targets, even if it meant slashing jobs to do so. Does that change in the wake of this?
It's a good question. That's something that we'll have to see. I don't expect it to change that much. This is an enormous company. I don't know if that will change the culture inside of the company. I mean, certainly it's going to change things like how the company thinks about security, how healthcare companies in general think about security. But, you know, as far as the business, I don't know.
Madison Moeller, Bloomberg News health reporter here in our Bloomberg Interactive Brokers studio. Check out this story written by the team.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Meet the Mets. Meet the Mets. Step.
All right, you know what we're talking about right now because of this song. Steve Cohen clinching a record-breaking contract for Major League Baseball, signing former Yankees superstar outfielder Juan Soto for $765 million over 15 years for the New York Mets. We got with us Jason Kelly, Bloomberg Originals chief correspondent. He joins us from Atlanta. Jason, also co-host of The Deal on Bloomberg Originals. Jason, how are you?
I'm doing great. I mean, not as great as Juan Soto and Steve Cohen, but pretty good.
Okay, what's going on with this? Everybody's talking about it today. You know that I don't watch every single baseball game that's on every year. So I saw this story and I said, we got to get Jason Kelly to join us to give us some context here.
Appreciate it. Well, Tim, you know we love size and scope at Bloomberg. This is the largest and the longest deal in Major League Baseball history, the biggest, richest contract in all of sports history. Juan Soto chasing the bag and getting it just across town from where he was playing. He's moving from the Bronx to Queens. That's as much of a part of the story as anything. You mentioned Steve Cohen, of course, very famous former hedge funder who owns the Mets, and he's paying up for what, by all accounts, by all accounts, is a generational talent.
Yeah, there's a lot of salty Yankees fans in this building, Jason. Let's talk some more numbers, though, because, of course, the Mets, so signing $765 million over 15 years. According to the New York Times, they reported that topped the Yankees offer, who offered Soto $760 million over 16 years. So either way, I mean, we're talking about huge numbers here.
We are, but Jason, does like that much money matter at 1 year matter when, you know, if you're going to stay on the team? Like, what does this represent here? Is there a lack of loyalty?
Listen, Soto had made it very clear that he was going to go for the best offer. This is his moment. He is represented by a legendary sports agent, Scott Boras, who was also very upfront about entertaining all deals. At the end of this past baseball season, where the Yankees obviously fell short of winning a World Series with Juan Soto and Aaron Judge and that whole squad, Soto basically said the Yankees don't have any big advantage over anyone else. The Mets were always in play. The Dodgers apparently had a conversation as well. The Blue Jays reportedly were involved in some talks, but this is a big deal for a team that needs a win. You know, the Mets have not made it to the World. They have not won a World Series since 1986, and they won another one. Steve Cohen really wants one.
You know, Tim, you're not thinking like a winner here.
Why?
You go with the biggest number possible. Yeah. Come on.
I don't know. When you get to that level, it's like, is an extra $5 million
gotta stay hungry
actually going to make a difference? I don't know. Jason, does this mean that the Mets, like, are they entering the territory of a generation ago what the Yankees were doing or what the Dodgers are known for when it comes to payroll? Are they gonna buy their way to a championship? I mean, that's the way it works, right?
It's a great question, and listen, there is certainly an imbalance in Major League Baseball and a lot of other sports, but certainly in baseball, between the big spending large market teams and the small market teams. What is really interesting about the business decisions that Steve Cohen and his team have been making is, as of right now, they will actually, even with Soto next season, be spending less than they spent this season. They were able to clear some space, maybe in order to do this. And one of the really interesting things that you guys probably know is that when you spend over a certain amount in baseball, you have to pay a luxury tax. So it's spending into the tax is the term of art. Steve Cohen has been very willing to do that. And again, it comes with the territory in terms of winning. Also keep in mind, Steve Cohen has a big plan for not just the Mets as a team, but the whole area around Citi Field. He's doing a huge amount of development. He's trying to get a casino there. So this is part of a larger strategy, a larger and long-term investment strategy that's clearly at work here.
I mentioned that Jason is co-host of The Deal with Alex Rodriguez and Jason Kelly right here on Bloomberg TV and Bloomberg Originals. Jason, some folks are out there comparing this to A-Rod's deal 24 years ago. What's going on?
I mean, it is the craziest comparison, Tim and Katie. It's so wild. So 24 years ago, Alex Rodriguez signed a record-setting deal of his own right, $252 million, 10-year deal. Here's the craziest part. I mean, we love these sorts of stories in our business. Same agent, same hotel where the winter meetings are being held 24 years ago in Dallas. These two deals were struck. As I mentioned before, Scott Boras, he's the guy behind all of this. He, negotiated a very good deal for himself. What's interesting about the A-Rod of it all, the Alex Rodriguez of it all, is, the Rangers, struck this deal when they signed him, and it didn't